Today, you're going to learn something that will literally save you millions. Okay, not millions, but it will save you a few $100s every single month and thousands of dollars every single year. In this video, I'm going to be showing you exactly how to get a mortgage, and as a bonus for you guys, I'm going to be dropping a knowledge bomb that not a lot of people know about in the middle of this video, so stay tuned until the end of the video. Let's jump right into it. Knowing how to get a mortgage is one of the best, if not the best thing to know whenever it comes to buying a piece of property. So I'm going to be breaking down these things for you. First, you need to get your credit in check because according to Rocket Mortgage, you're going to need a 580 credit score or better to take advantage of one of the most powerful loan options there are out there, which is the FHA loan. And that allows you to put 3.5% to 5% down in property so you can actually live in it. And that leads me into my next point. You're going to need 3.5% to 5% down as a down payment. So for example, if you're buying a $100,000 home, that's going to be $3,500 to $5,000 you're going to need for the down payment. That doesn't take into effect all the other costs that are coming into buying a home that you might be paying, some of these seller's fees and a bunch of other fees that come along with buying a home, but nothing crazy. Maybe $1,000 to $3,000. It depends on what the purchase price is of that home and how much you're actually going to give the seller in closing costs. If you want more valuable content just like this, hit that subscribe button, click the bell icon so you get notified every single time I upload a new video just like this one. The third thing you're going to need to do is go get a pre-approval letter from my bank. Now, a knowledge bomb is going to be dropping in here just a second, so I guess knowledge bomb alert. But you're going to need to contact a bank and get a pre-approval letter so you can actually submit that with your offer. So it actually makes it look like your offer is stronger than the other offers that are going towards the house that you're wanting to buy, because you already are letting the seller know, hey, I have a pre-approval letter from the bank, so I can actually get the funds to close on the deal. Now, in some states, you actually have to have a pre-approval letter when it comes to making offers on real estate. A pre-approval letter is just for a bank to kind of look at you for face value and be like, yes, we think we can give you this money to close on the deal. Because whenever you're actually going to buy the deal, after you get it under contract, you're going to be going under some scrutiny with the bank. Here's that knowledge bomb I wanted to give you. So whenever you go in and you apply for a pre-approval letter with these banks, and whichever bank you decide on, don't settle for just one bank. What do I mean by that is, if you go to, let's just say to Chase, if you go to Chase and you go get a pre-approval letter for this home, then you need to go over to Wells Fargo or some other local banks in your area and also get some pre-approval letters, because let's just say the first one you went to is Chase, and then you got a pre-approval letter from them. You can take that pre-approval letter, take it to Wells Fargo and be like, hey, can you beat this pre-approval letter? Because banks want your deal. They want your money. So they're going to be trying to beat out the other competitors. You might be getting the best bang for your buck if you go to local banks in your area. So banks that aren't huge like Chase, Wells Fargo, USAA, and other banks like that. Okay, here's the actual knowledge bomb. So when you go out and you apply for the first pre-approval letter, yes, it's going to drop your credit score by about 4 points on average. But don't freak out because I'm telling you to go apply for other banks, because whenever you go apply for other banks, how the credit bureaus look at it is, oh, you applied for a mortgage. We're actually going to give you a 14-day window where you can go out and shop around different types of mortgages from different types of banks. So in those 14 days, you aren't going to get penalized, your credit anyways. Your credit isn't going to get penalized for however many pre-approvals you apply for, because all banks aren't equal. You might be going to Chase and they might be telling you, hey, you have an interest rate of 4%, and then you go to Wells Fargo and it's 2%. Then you go to a local bank and they're like, hey, we can do 1%. That probably won't happen in my lifetime, but 1% would be absolutely crazy. And a 1% to 4% difference is absolutely nuts in regards to interest, because that can literally save you hundreds and hundreds of dollars off your mortgage every single month, and then that equates to thousands of dollars a year. And let me know in the comment section down below if you like the green. If you've been following me here on the channel, you know that I always go with purple because for some reason I'm into purple right now. So that's why it's always been like that, but I'm deciding to change it up because it's Christmas. So Merry Christmas to you guys, if the people that are celebrating it. So happy holidays for the people that are not celebrating Christmas. And if you got value out of that knowledge bomb, hit that like button, turn it blue so the YouTube gods can push out this video to more people and give me a happy Holiday. Once you found the best mortgage option for you, you're going to be submitting a bunch of offers to a bunch of different houses, because most of the time, the first house that you're going to isn't going to be the house that actually accepts your offer. Especially in that market that I'm in Colorado, you're going to be submitting an offer within 24 hours of a property hitting the market, and that property is going to have 10 other offers. So it's depending on the market that you're in, you might, be very competitive and you might not be. So just keep that in mind. Whenever you do get an offer accepted, you're going to be contacting your bank and just ask them, hey, how do I fill out an online application? Because most of the time it's online, especially now with, the pandemic going on, everything has gone online. So you're going to be asking them, hey, where can I submit a online application, and where can I submit all of my documentation? Here's the documents you're actually going to need. You're going to need the last 2 years W-2s. You're going to need at least the last 30 days of bank statements. So however many bank accounts you have, you're going to need at least 2 bank statements from each of those accounts. So for me and my wife, we actually have a total of 7. We have 7 bank accounts. That includes our savings account, expenses account, investing account, personal accounts, etc. You're going to need the last 2 of your pay stubs. So whatever job that you're working, you're going to need the last 2 months. You're going to need the past 2 years tax returns, your social security card, driver's license. And if you're self-employed, I believe you're going to need the last 2 years of your pay history. So however much you've been getting paid, and I'm pretty sure they're going to take all that and average it over the last 2 months. So they'll be able to see what you actually qualify for. Now, you don't need to have these things before you actually apply for mortgages, but these things do speed up the process. And after that, after you submit all that documentation, you're just going to wait for the bank to do their thing. And if they need any additional information, they're just going to contact you directly through probably your email or a phone. And if you're interested in real estate investing, there's actually my top 5 real estate investing books down below. So go check those out. Until the next video, guys, I'm out. See ya.